put credit spread tutorial. We're doing another one of this. A lot of you like put credit spread. So in order to get started, Market Chameleon 7 days trial, link in the description below, and we're gonna go over this screener. And in order to get to here, all you gotta do, click screener right here, and we're doing the second tab, bull put spread. Okay, now what is a put credit spread? Just an FYI, if you are bullish on a stock, instead of just gambling, buying calls, or just buy the stock itself, you can sell a put credit spread and you can make money three ways. Three ways to make money when you sell put credit spread. This is one of my favorite, if not the ultimate favorite, basically strategy for selling options for income. So the three ways are as follow. If you are bullish on a stock, let's say you're bullish, I'm not gonna say a stock, but let's say the stock is at $100 and you're bullish that it will go up, you can sell a put credit spread, meaning you sell one out of the money put. Let's say 95, you sell the 95 put and you buy the 90 put. This is the credit spread. As long, and the way to make money three times is either if the stock at 100 goes up, it goes to 101, 110, doesn't matter, it goes up and your put credit spread is 95.90, you made the whole amount of income. The second way is if the stock doesn't go anywhere. If the stock stays at $100, well, if you have calls, you're losing. But if the stock stays the same at $100 by expiration, you make money because you need the stock to be under 95 to start losing. And the third way to make money with the put credit spread is if the stock goes down, but it doesn't go down up to it goes down up to your credit spread. So in this case, if you have 95 put that you sell and $90 call put that you bought, as long as the stock stays at 95.01, and remember the stock hypothetically it's 100, goes down to 95.01, you still collect 100% of the premium. So let's go over some filters, and before we do, read the disclaimer over here and know that this is not a financial advice. I'm not a financial advisor. This is for entertainment, educational purposes only, and my name is Eve, also known as Finance After 40. So the first video, and if you are just joined my channel, I put a new playlist that's called Put Credit Spread. I'll do like, I don't know, 5 to 10 videos, tutorials just on this. Go check the playlist, and you can sign for Market Chameleon, of course, link in the description. So the last video we just went over this. We went over expiration, that you can pick whichever expiration you would like to sell put credit spread, and we're doing all those filters to look for something that is a high market cap but also enter our criteria. We also did assume that you have a small account, so we changed the spread to 1, which means, again, for the same example, the stock at $100, so the spread, the put spread will be, for example, 95.94. So your max loss is $100 collateral minus your income. Let's say your income is $30. 100 collateral minus your income, $30 is the max that you can lose if the stock goes below 95. Okay, moneyness is also something very important. I like to be out of the money. The spread is out of the money. Again, same thing, spread is out of the money, meaning the stock price is higher than the short strike. So 100 is higher than the 95 or 96 or whatever. You can do in the money, you can do one put leg in the money and the other put leg in the money. I like to be out of the money to make life simple. Bid and ask, I'm just gonna leave it the same. This is just for like spread, liquidity, but at the end of the day I'm looking for high market cap stock, the Apple, the Nvidia, Tesla and all that, so this doesn't really affect me. And if you have a watch list, you can put just the stocks that you like from your watch list or your stock screener. And then instead of 150 pages, we are down to 58 pages only. Okay, that's progress. Now let's move on. Let's move on. And again, once you are with Market Chameleon, you can filter by this because they have all those default settings, default filters that you can play around with, and we're gonna go over them as well in future videos. Best by return if the stock is flat plus 10% edge. I'm gonna tell you in a second what it is. Market leaders, positive theoretical edge plus 70% win rate plus 10% edge. Downside cushion, I like this one. Best by downside cushion plus 10% edge. We're probably gonna do a specific video on this. ETF, seasonal, top stock in uptrend, seasonality, tons and tons of options. Feel free to comment below which trade idea you found using those filters. So let's continue. As of now, just as of now, without doing anything, we found all the page number one is NVIDIA at 108, okay, and Avago, but Avago has earnings. You see, we can filter in earnings in a minute. But just for now, we got NVIDIA, the first one, price 108 today, just for trade opportunity. I'm not saying do it, just telling you what the software came up with some trade ideas. 85.7 win rate. Not a lot of edge, okay? The negative edge, meaning that you should have collected 14 bucks, but you're collecting 11. You can put the limit for 14, 15. Hope it will catch a bit. The trade itself is for September 20, okay, 2.5 weeks from now. And it tells you to sell. You see, sell the 94 put and buy the 93 put. And the free ways to win on this one is as long as NVIDIA, they can go up, it can go up from above 108, great, you win. It can stay 108, great, you win. And it can go down all the way to 94.01 or 001 even, and you still collect the entire amount of premium. And the max loss is this minus this, 100 bucks, collateral minus your income, 11 bucks. So you're risking like 89 to make 11. I mean, some people will not like that ratio, but at the end of the day, NVIDIA already down 10% today. They need to go down to 94 in 2.5 weeks. It's a possibility, but according to the software, 85% chance of winning trade. But what I want to do is continue with the filters. So let's keep going. So this is a nice one, return if the stock is flat, meaning NVIDIA, for example, 108 stays 108. And you see here, all those stuff, any positive, any negative, above 5%, your return, how much you make if the stock stays the same by expiration. I like to go above 10% just for the sake of making things simple. But you can go all the way. I don't know if there's above 100%. Maybe you can filter and let me know if you found something. All the below, which means that probably the put credit spread is in the money or the stock needs to go up. So I'm just gonna focus above 10%, which means if the stock doesn't move anywhere, you make at least 10%. Okay, and then it filters us. You see here now, instead of 58 pages, okay, we still have 58. Let's see if we found something else. No, NVIDIA is still here. If you see, that means that if the stock stays flat, you make above your return are over 10%, which is good. Cushion to break even, another thing that I like the stock that even if the market crash and the stock goes down another 10% plus, I'm still making the entire amount of income. So cushion to break even, let's change this. We got 5 options, at least 5. Let's do at least 5% to stay like super conservative. So that means that the stock needs to go down at least 5% and you still at least break even. We still have NVIDIA, number one right here, 94, 93. And after that we got 95, 94, and it's all NVIDIA. We got Avago, Oracle, Alibaba. Alibaba is interesting. Let's see what we got here. 77% for here. 74% from here. Let's say, just for the example, let's see what we found. And I'm not looking at Oracle, Navego, just and Uber for that matter, because you see here the E is the earnings, and we're gonna filter that in a second. You see here we only have 18 pages left instead of 58. So Alibaba, for example, price 82, 200 million market cap, and it tells you for September 20, sell the 78 put, buy the 77 and collect $16, but in reality, based on history, you should have collected 24 bucks. So maybe, I don't know, put a limit for 20 or something and hope for to catch a bid. But at the end of the day, for this trade, as long as Alibaba can go up, you win. Alibaba can stay 82, you win, and Alibaba can go down all the way to 78.01 and you still win. So that's why I like the put credit spread. When I'm bullish on a stock, and when the stock is out of the money, and when the spread is out of the money, and I put all those filters and other filters that you can play around with, those are the trade opportunities as I'm looking for. 3 ways to win. Okay, now let's go continue. Buy strike delta. In here, the delta, you can say I'm only buying the 80 delta, 70 delta, or like 0.5, 0.10. I'm not playing with this. It's up to you. It's up to you. Okay, and sell strike delta. Okay, so that's the. I mean, it's up to you. You can play around and see what you see. Earning day, this is what I like to avoid. I don't like earning, because earning, everything can change, and all those math and numbers, they can just mess up with. So earnings, you got before expiration, after expiration, none, and uncertain. I like to pick this one, after expiration or none, as long as so there's no earnings. And if you click here, you see that we are changing from 18 pages to now 15 pages. So let's see what we got. Still Nvidia. Nvidia is right here. And then we got Uber. Interesting. So Uber don't have earnings, but let's see what we got for this, just for the example. Price 71.86. Okay, collect 10 bucks compared to 13, which you should have collected in the past, but you got 86% win rate, so maybe put a limit for 13. And the put credit spread is 68.67. So again, if Uber go to September 20, 2.5 weeks from now, and so if Uber stays the same, you win. Goes up, you win. Goes down to 68.01, you still win 100% of your income. Okay, and we got other stocks in here. We got Shopify, for example. We got that's a nice edge, 3.1 plus 86%. Price 71, sell the 67, buy the 66. So there's so many trading opportunities every single day to just generate passive income by selling option put credit spread. We got Intel in here, interesting, and that's up to you. But we eliminated the earnings, and if we want to continue ex-dividend, I mean, it's up to you. If you want to be super conservative, same thing, after expiration or none. I don't like to touch the dividend. It's not making a big dent, and I assume the Black-Scholes model for the stock, for the options, already price in the drop in the stock price after dividend day, after ex-dividend. So I'm not touching that, but you can play around. Company event, this is important. I like to say the same thing, after expiration or none. I don't want like Tesla doing like an event and the price can go higher and all that stuff. So now we removed the Nvidia, and now we got Alibaba as number 1. Interesting. And after that we got ARM, PDD, Shopify, PayPal. Price 72, 90% win rate. Let's see what they have. 68.67. Okay, you see, same for September 20. Okay, and you can play with the expiration as well. IWM, the Russell 2000, price 213. This is an ETF, collect 11 bucks, and as long as it stays 202, 201. So this is for small accounts that want to play around with the put credit spread. So you're risking, your max loss is again $100 max minus your income. Why? Because you did a spread between the strikes 1. This is for the if you did 5, not max 5 is all of them up to 5, but if you do 5, your max loss is 500 minus your income, and this one $10, that's 1,000 or 2,000. Those are for the big stocks like the, I don't know, booking.com that has like $4,000 price tag. Something like that. Now let's continue and finish up just the filter. Theoretical edge, I like an edge of above at least 10%. Okay, below is a negative edge. So let's do above 10%, but any positive is fine. And again, there's a lot of filters. Edge, just so you know, let's say above 10% means that you are collecting more income than what you should have based on history. So we see here we only went to we went too far. We only have 4 options, okay? Only 4 choices, but you see the edge is, let's say this one, 16%, you collect $15. But again, small market cap, I'm not touching that. Billy, I don't know, collect $25 compared to 18. 10% edge, I'm not even looking because I will not trade those stocks. So maybe do any positive. If you want to go back and find the Shopify, the PayPal, MGM, CCJ, and all that stuff. MGM, for example, they have the $16 you collect compared to $10. That's the edge, okay? 83% win rate, price 36. And it tells you to basically sell the 34.5 and buy the 33.5. That's $100 minus your income 16. Your max loss is $84. Okay, and you got all those information is in here as well. Downside cushion, percent of return if the stock is flat. Theoretical win ratio, how much I want to win, at least above. If you go above 90%, let's see what we got here. Interesting. So we got the MGM, okay, above 90% win rate. We got PEN as well. USO, the ETF for oil. Interesting. So the price 71 for the oil, 67, 66. Basically, there's so many opportunities. MGM, again, 36 is the price. You sell the 34, 33, collect $12, 93% win rate, positive edge. You see, it doesn't have to be, and it's above 90%. If you go to 80%, for example, you will get, you see, a whole, not a lot, but you still get a lot more options. Technically, you can sell like 100 spreads a day if you have the possibility and the buying power for that. But let's go back to, let's say, 90%. Show best only, best theoretical edge by symbol, best theoretical edge by win rate, best return if the stock is flat, best return average historical move, best return seasonality, best downside cushion. I like to show by best win rate, okay? I do either the both of the first. Either I like the more income for edge or best of theoretical rate, basically. So again, we got ourselves same thing. We got MGM, USO, PEN. Those are the ones that I know. But you may know others and you may find others. But again, those are small profits, but they add up if you do it again and again, if you just play with the filters, and of course you can change any of those. If this was valuable, Market Chameleon link in the description below, 7 days trial. Next couple of videos we're gonna go over all those default settings and see what we got, but this is for you to play around with the settings without trying the presets, basically. Hope this was valuable. I'll see you next time.